sort of assets that aggregate, like the dollar does today. The dollar sort of aggregates demand for smaller currencies, and we see XRP playing that role.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video banger. In today's video, I'm going to show you all that DeFi and crypto is for a fact merging with traditional finance. And we are entering into a new era where we have the ability as retail investors to be our own bank through the utilization of these digital assets implemented in the DeFi ecosystem, generating us passive rewards. Digital assets like XRP, stable coins, so on and so forth. We can use them in such a way to generate passive rewards, and so many people are sleeping on these opportunities. And it is because people lack awareness that every single day the dollars in our pockets are quietly losing purchasing power. Inflation eats, debts swell, and the global fiat system strains at the seams. Yet most people still let their cash sit idle, shrinking unnoticed. Now, we're at a point in time where we do not have to stand still. Two powerful tools stand between us and our weakening currencies. Owning assets that rise as the dollar slips, because I'm in the United States, so I'm specifically talking about dollars. So think digital assets like Bitcoin, like XRP. And then also putting your dormant cash to work, i.e. participating in yield generation strategies. So in today's video breakdown, I'm going to show you all how Ripple representatives on stage have been talking about excessively as of recent times about DeFi opportunities. And I'm going to show you all how this is all coming together to be integrated into the financial system, the traditional financial system, showing you all participants on stage from large organizations like MasterCard, showing you guys in terms of documentation that all of this is happening right before our very eyes. As always, bringing you all some of the realest research and information in the game. Stay tuned to the very end of this video breakdown. This is going to be one of those videos that you can share with a friend or family member to get them awake and aware as to what is really happening via the integration of crypto and digital assets into our financial infrastructure. So we are going to start here just to play some video clips because there have been some major announcements from Ripple as of recent. Now, nothing is fully coming to fruition yet, but Ripple just recently offered to acquire Circle, the company Circle. Listen here to what David Schwartz says, because they've been telling you all this on stage for quite some time. This video breakdown is from over 4 years ago, and tap into the role that David Schwartz says XRP can play in the global financial system.
Now, and everyone and their dog is issuing one from, JP Morgan to Facebook. But, especially what the banks are doing. I think last week a new kind of consortium of banks said, hey, we, rolling out this new stablecoin. Does that kind of freeze you guys out? Or
I think it's actually helpful. One of the problems that people have is the ability to hold digital assets can be difficult, particularly with the volatility in some digital assets. Stablecoins are safer to hold if you can trust the issuer. So I think to that extent, it can be helpful because you still need liquidity. So if you imagine a dollar stablecoin issued by JPM, and you have maybe some other dollar coins issued by companies like Circle, and everybody seems to be issuing a stablecoin, and then you have stablecoins in other currencies, because if you're not in the United States, a dollar coin is not really all that stable. You still need liquidity between those stablecoins. And I think it's also important to remember that these stablecoins have counterparties, and there isn't a universal counterparty. There isn't some counterparty that everybody in the world can have equal access to. It's going to have to be in some jurisdiction. It's going to have to be part of some regulatory regime. And so I think if the vision is this sort of open participation, this sort of internet of money, collateralized stablecoins will be players, but I think there will still have to be liquidity between them. And if you imagine dozens of stablecoins, hundreds and hundreds of markets is probably not going to be as efficient as going through some sort of assets that aggregate, like the dollar does today. The dollar sort of aggregates demand for smaller currencies, and we see XRP playing that role. Sort of assets that aggregate, like the dollar does today. The dollar sort of aggregates demand for smaller currencies, and we see XRP playing that role.
Now take a second and listen to Monica Long from Paris Blockchain Week, April 8th through the 10th, 2025, and what she says about DeFi.
So Ripple is acquiring Hidden Road, which is a prime broker. They're a very high growth prime broker, one of the largest as the non-bank prime brokers. And this is a big deal. It's $1.225 billion.
What does it mean for Ripple's business? Because you've been on a path to really diversify the business beyond kind of how you started in payments, and there's custody, stable coins now. And so what does this add to the Ripple business?
It's all coming together. So we've talked for a long while about institutional decentralized finance. Many of us here talk about institutions coming into the world of blockchain and DeFi. And this is going to blast that into a new milestone, kind of a new stratosphere.
So you have the Ripple president, Monica Long, sitting on stage telling you all that this is going to blast DeFi into the stratosphere. That is huge. Listen now to what Daniel DiMartino says when talking to financial institutions about their strategy right now and how they're dumping dollars.
So I think right now, in the last few times we've met, I've said that the biggest risk right now is that after kind of this slow moving train wreck mode that we've been in for several years, right? We've been watching negative revisions to payrolls for how long now? It's becoming rote. But we've kind of segued from really slow moving to, oh my gosh, I can't catch my breath. It's happening so fast. And that I think is where we are. We are in the midst of a tentative collapse in confidence. And these are not words that I use lightly at all. The dollar is under siege. The world is questioning the reserve currency status. Don't get me wrong. The practical, you don't wave a wand or say, there's somebody new in the White House or it's post-Liberation Day and we're in the middle of a global trade war. And therefore all of these debts that populate the globe in dollars, denominated in dollars, are all of a sudden not going to be denominated in dollars. But I'll tell you a curious comment that I heard made recently from a portfolio manager in London was, however I can express the trade, I'm dumping dollars. That's what I'm doing. I'm in a dollar dumping mode.
Now, most people will ignore this warning, but I'm here to show you all that it is possible in many different ways to defend against the devaluation of our fiat currencies, whether it be through means of investing or primarily, in my personal opinion, right now, because we have a massive opportunity in DeFi, I'm particularly fixated on defending my fiat positions and the value of my purchasing power through yield generation. And I'm here to show you all that the financial institutions and the large organizations in the space are telling you all that this is now possible. And so many people are sleeping on this opportunity. So here in this post, via an announcement made by Ledger, I said no more leaving money on the table with checking accounts that earn 0.05%. Now you can start earning up to 9.9% APY on stablecoins directly through your cold storage Ledger devices, safely, securely, and with full self-custody. And with a crypto debit card, you can earn yield up to the very last second that you spend. That means your money is never sitting idle. Now, I know that a lot of people that don't have a lot of capital be like, oh, making 9% on $1,000. Is that even worth it? Absolutely it is. Earn up until the very last moment that you spend. The governments, the banks, they lend out our money and earn interest on it. Why can you not do that, right? Again, I'm trying to show you guys that this is all possible in a very safe and secure manner. This is passive income redefined. So Ledger announced that they're introducing stablecoin yields on Ledger Live, where you can start to earn APY on USDT, USDC, and DAI. All right. Now, let me show you guys, because I mentioned in this post that you're going to be able to do this with a crypto debit card. Okay. This is crazy. This is a document directly from crypto.com where I said it's coming. Automatic yield generation will be the new normal. Optimizing yield strategies through AI-driven analytics supporting yield farming, liquidity provision, and staking, maximizing returns with minimal effort. Okay? This is, again, why we emphasize the importance of tapping into the Wealth 28 Club, so you understand these terminologies. You understand how to implement them in a yield generation strategy with minimal risk exposure, because this is going to become the new normal, and they're telling you guys this in their documents. Again, considering that I mentioned the crypto debit card, crypto.com offers one. So imagine in the future, or maybe even now, if you decided to take the risk, you have your stable coins or your idle cash that you have in your checkings account, you transition that into stable coins on the Ledger application, and you're generating yield. You're generating passive rewards, 9%. Let's say you have $10,000 in your savings. Okay. You can literally earn up until the very last moment that you spend with your crypto.com debit card. Now, before I read this document, let's pause. And I want you all to remember Christine Moy from Apollo sitting on stage talking about that she is using the same exact strategy. And then Robbie Mitchnick sitting on stage with her when asked the question, how do you compete with these types of solutions? Robbie Mitchnick responds by saying, well, as a bank, we have to offer these solutions to our clients.
Okay, let's talk about how, like today, when I get paid by Apollo, I get it deposited into, my bank account. And, on any given month, I might check my account and say, okay, my credit card bill is going to be this much. I have this much left to, invest. Usually a hot mess and working too much. So I'm like, maybe I'll just put it in treasuries and get whatever the treasury yield is, if at that. And it's like a multi-step process, and I need to go press some buttons and call someone to confirm it. And then inevitably the next month I have to pay taxes, and then I have to unwind out of that and like put it back into cash, and then like wait until like my check clears. Now in a future world, and this is what I'm working towards and building with each of you, is, I get paid into my crypto wallet. And in my crypto wallet, I have almost like a model portfolio designed that's customized to me. It's going to be 10% stable coins. It's going to be 20% BIDL, money market funds. It's going to be 25% Apollo private credit, and like 25% Athena. Right?
Give me your pen, Robbie. I got to write this down.
Right. But like, imagine like I have like basically like a customized portfolio to my risk profile that says Christine at all times wants to have her account in this pie chart.
Yeah.
Right?
There's a smart contract that when the assets drop, it deploys.
It deploys automatically. And then what that means is that every last penny of my earnings is fully invested in yielding without me actually having to do anything. And what that means is that every last penny of my earnings is fully invested in yielding without me actually having to do anything. And then, if I'm having Nobu at lunch and basically I use my securitized debit card that's connected to my securitized wallet, basically like, okay, here's like $100 to Nobu, that's an automatic swap of $100 out of my BIDL into US dollars, into USDC, off ramp, like CU0 hash, off ramp to pay Nobu. And then essentially, like, that means not only is every penny of my earnings deployed, it's deployed up until the last second of which I actually spend it.
One more question. Do you
Go.
mind?
Thanks for teeing me up.
All right, so you're a banking CEO, and you just heard this great explanation from Christine. How do you prevent your bank from getting bypassed by some of the things that she's talking about in terms of products?
You have to provide that because they have the incumbency advantage to do that.
This is massive, okay? And look at what they say in their documents. Crypto.com DeFi AI, February 2025. This is huge. It talks about how AI-powered bots are going to be able to analyze real-time market data, execute trades, and refine strategies based on predictive modelings. How they are going to be able to optimize yield strategies, where AI-driven analytics are going to support yield farming, liquidity provision, and staking, maximizing return with minimal manual effort. Then it talks about here, automating DeFi transactions, being able to manage crypto wallets such as checking account balances, viewing deposit histories, and more, completing transactions using natural language input, and how they're going to be able to purchase newly launched meme coins. And my favorite part is where it mentions automated staking and DeFi strategy execution. So in the future, these AI agents, which are going to be integrated with our digital wallets that can be integrated with our crypto wallets, are going to be able to automate things for us, okay? Hands-free, literally just generating passive rewards on a consistent, daily, honestly, hourly basis, second by second basis, if I'm being completely honest with you, okay? So now I want you guys to hear it from large market participants. Tap in. This is a MasterCard representative. This video was from 3 weeks ago and still only has 50 freaking views. 2 clips that I'm going to play back to back. One where she goes on to talk about the power of DeFi and how DeFi is making a huge comeback. And then she goes on to talk about how MasterCard is enabling crypto card payments.
Things moving, and I wanted to pick out 4 specific topics to highlight. I think we see a convergence, and I've heard it in the previous panel, between DeFi and TradeFi. We see a lot of the traditional financial institutions player moving more or feeling towards DeFi, feeling more comfortable offering actually DeFi use cases. We have seen it with BlackRock, with the Bitcoin ETP or ETF. We have seen it with Crypto.com actually moving the other direction, starting to offer trading, stock trading. We've seen PayPal offering stablecoins. We have seen SocGen offering their own stablecoin as well, and the list goes on. So we've seen a lot of that going on, and it continues. The second trend I want to highlight is that DeFi has come back massively. Actually, the value locked in DeFi protocols has increased from 90 to 190 billion US dollar, an increase over 111% over the course of a year. Stablecoins is probably not a surprise. They're called the killer use case in the crypto industry at the moment. The second one is off-ramping. So here we allow actually an exchange, let's say a Coinbase, a Binance, a Gemini, just for the sake of an example, to offer their customers to move their funds from their platform onto their card or onto their bank account via MasterCard Move. And the second off-ramping use case is actually what we call the crypto card or the Web3 card. is, yes, I can use my Gemini card, my Bybit card, my I don't know, Nexo card to go actually to Starbucks and pay my coffee, or to H&M pay my pair of trousers with crypto. So those are the use cases that are already live and working in the market. We have around 100 different, or more than 100 crypto cards in the world live.
And she mentions how they have a bunch of crypto debit cards live already in the market. She also mentioned that DeFi is making a huge comeback and that stablecoins are the killer use case. Recently, what did we just see announced also from Ripple, right? That you can now supply and borrow RLUSD on Aave, and I believe they're offering at around 6.9%, if I'm not mistaken. I could be corrected on that, but based off the last piece of information that I saw on the Aave website, they were offering 6 some odd %. Okay, that is huge. Again, stablecoins, a killer use case. Obviously, of course, as of most recently, we saw this announcement that Ripple reportedly made a $4 to $5 billion offer to acquire stablecoin competitor Circle. They know exactly what is happening behind the scenes right now. And again, people are sleeping on these developments. Why is this yield generation swell of content consistently coming? Well, it's because the people that run this world are tapped into this information. Okay, they are the ones that I gather information from, and I'm here to reiterate that information to you. Check this out. This is a post that I made to you guys just the other day. This is directly from Rothschild's asset management website. Okay, you can't get any more like straight to your face than this. I'm just here showing you guys that this information is readily available. And right here, one of the individuals from this is from the Global Equities Portfolio Management at the Rothschild, says, stablecoins are an essential market infrastructure within the digital asset world. They reached over USD $33 trillion in transaction volume over the past 12 months. This is more than 2.5 times Visa transaction volume in 2024 and paves the way for large-scale asset tokenization. Why on earth would you ignore this? Okay, after everything that I'm showing you guys, from the Start Foundation of David Schwartz talking about XRP's role in the financial system, Monica Long talking about how it's going to boost DeFi to the stratosphere, how I just showed you all how we're in a transition point where TradFi and DeFi are merging together, just like traditional financial players are going to be able to earn and generate yield and passive rewards up to the very last moment that they spend their assets. So are we as retail investors. You should not be ignoring this, okay? And these people, these large asset managers, these systemically important organizations that run this world, they are not ignoring it. It says right here, many companies have announced advancements in their digital asset strategies. Some, which had previously remained on the sidelines, now declare they are considering integrating them with corporate treasuries or developing new products and service offerings. We are convinced of the considerable growth potential for digital asset markets and anticipate an unprecedented network effect that will benefit companies in the sector. This context will revitalize innovation and activity both in industrial terms and capital markets, with several major IPOs expected this year. In the short term, regulatory clarification will support the strategic integration of these assets into the financial world. Again, this is coming from the Rothschild's website. In the medium term, enhancing the legislative framework, particularly around stable coins, will strengthen institutional backing for this asset class, protecting both investors, driving this technological revolution, and their clients from potential regulatory reversals. This institutionalization is expected to enhance the quality of products and services driven by increased competition in a significant broader market. The players that best adapt to these institutional changes will emerge as market consolidators and strengthen their position as market leaders. What a huge mouthful from Rothschild's asset management. And again, information that goes readily unnoticed that nobody is paying attention to. Last but not least, I'll end it here. We have a stablecoin conference coming up in 2025, and Ripple is sitting right there. So I'm just here as a market participant to show you guys that all of this is possible, and they're not hiding this from anybody. Yield generation is the new sexy. And whether it's you learn how to generate yield with digital assets like XRP, so in the future you never have to sell it, you can pay yourself with passive income, or you have dormant idle capital or cash sitting in a savings or checkings account that's getting hardly any yield, you can take that, putting into a safe place like a cold storage wallet and start to generate passive income, now is the time to start to learn how to do all this stuff. As always, if you guys want to tap in and learn how we are earning yield on our idle digital assets over at CYPRX, tap into the Wealth 28 Club. Visit CYPRXtrading.com. We'd love to have you on the team, bringing you guys the realest information in the game. Make sure that you smash that thumbs up button and subscribe to the platform. We do appreciate the love and the support. And with all of that in mind, I will see you guys in the next video breakdown.